resuming service. 1 second.
No,
I think we are live, yes.
yeah,
Yeah, I think we got it, I guess.
yes. Yes.
Yeah.
Yes. No. No.
Hello, my dear friends. A very good afternoon. Very good afternoon. Wonderful. Good to meet you, all of you guys, at this moment of time. And I'm sure and I'm very confident that you have successfully completed a couple of exams and wrote really well. And now that it's time for taxation paper, you all are aware that we have got some good time for taxation, and luckily we have got a couple of more days extra to prepare for tax. And that's the reason why I thought I'll connect with you live once to discuss about your preparation, how it is going on, and also to talk a couple of issues in terms of what are the key focus areas in taxation. Now, when I say key focus areas, it is, first of all, you have to understand that when I say key focus areas, it is not that only these topics will come in the examination, but it is just that these are the major focus areas where there is a high probability that a question may trigger in the examination. And when I say key focus areas, it is based on two important parameters. Parameter number one, past trend analysis of the papers which have come out in the last 5 years. That is point number one. And point number two, the interesting amendments which have come up with respect to taxation. As you are aware that in the writing exam in May 24, Finance Act 2023 is applicable, and lot of interesting amendments have come both in income tax as well as GST. Already there is separate video with respect to amendments on our YouTube channel. So my intention now is not to talk about the amendments, but my intention is very clear to discuss with you and spend some time to talk about what are the focus areas in the taxation subject in next 1-2 days. What is that you have to focus more upon, so that you will add some better value in the examination. That's the whole idea. I'm sure we are all ready. If you are ready, I'll just share my screen and discuss everything in detail. Thank you. Yes, I'm sure the screen is visible for all of you. Right. So first of all, when I talk about taxation key focus areas, my dear friend, first thing is very clear in your syllabus. If we talk about income tax, we know that income tax law has a weightage of 50 marks. GST has got 50 marks weightage. Gone are the days of 60-40, but now it is clearly 50-50 marks weightage what we have got. Now, when I talk about income tax law, we have got first and foremost interesting concept like basic concepts. In that, students should be very much clear with the tax rates, and most important element called section 115 BAC, which is nothing but default tax regime. And let me tell you very clearly one point, my dear friends, that is, there were times where old regime, new regime, the story was totally different, but now it is very clearly default tax regime 115 BAC. Now, there is no question of opting for a 115 BAC. 115 BAC itself is the default tax regime. If an individual or HUF doesn't want to be in default tax regime, he can wish to opt out of default, but default is not something what you will choose. Default is something which is very clearly applicable. If you want to walk out, you can walk out. But one more point they told in the law is that if you are somebody who do not have business income, then you are at liberty. 1 year you can choose default, 1 year you can choose optional. You can switch over year on year. But if you are somebody who have got PGBP income, and if you are in default tax regime and you say that I want to shift out of default and go to optional, then in that case, you cannot come back to default. But the point is you can come back, but you will be allowed to come back only once. In life, you will never be allowed to again go back to optional. That's an important point. And it should also be very clear that what are all the deductions we can claim in default and what are the deductions we can't claim in default. And I'm sure you guys know very clearly that in default tax regime, there is no question of Chapter 6A deduction. No Chapter 6A deduction except for there is something called 80CCD2, 80CCH2, and 80JJAA. Keep this point very clear in mind, my dear friends, that apart from these three deductions, you cannot claim any deduction whatsoever if you are paying tax under a default tax regime. And 80CCD2 talks about employer contribution to pension scheme of central government. And 80CCH2 talks about Agniveer scheme, which is basically given to the persons who have joined the army. Then 80JJAA is basically for deduction for employment of new workmen. When there is employment of new workmen, the assessors who are subject to tax audit, they can take deduction the rate of 30% of additional employee cost, which they can take it as deduction for a period of 3 years. So this point you should definitely keep in mind. And one more important point is that section 10AA is also not allowed in default tax regime. Keep that point in mind, my dear friends. And one more point to focus is that when we are paying tax under default tax regime, my dear friends, the provisions of AMT will not apply. I'm sure you know the concept of AMT, which stands for alternate minimum tax, and this AMT will apply in case where assessee has claimed any of the deduction of 80 QQB or 80 RRB or 80 JJAA or 10AA or section 35AD. If you have claimed any of this deduction, then only the concept of AMT will apply. And if AMT will apply, what is it you are going to do, my dear friends? AMT will calculate tax rate, adjusted total income will calculate. On that, we'll apply 18.5% as the tax rate. And if normal tax is less than AMT, then we have to pay AMT to the government. And if normal tax is more than AMT, we have to pay normal tax to the government. Ultimately, government logic is that AMT stands for alternate minimum tax. That much tax has to be paid to the government. Make sense, right? Exactly. So this is one key important focus area, what you have to keep in mind. There is a high probability that whenever a question comes in the examination, question will clearly specify. Now, one more point, let me write here for everyone's benefit. That is, if question is silent, then follow default tax regime always. And if question says both, that means what? You should calculate as per a default and also optional. Both has to be done, my dear friends. And let me tell you, in the latest RPP, there was one question where they clearly told if question says, please do under default and optional and also AMT. In that case, you have to be very cautious in solving everything. That's very important. And let me tell you very clearly, nowadays, students keep thinking that MCQs is something which is very different from the concepts what we learn. It is absolutely not like that. MCQs is nothing but the content what you have got is being brought into the form of a case study. And when situation and circumstances created, and on that situation or circumstance, questions are being asked. If you are clear with the concept, any MCQ can be solved. Don't just be stuck with any MCQ as such. MCQs is not something which is very different. MCQs are a part of the concept. So if you are clear with the concept, you can definitely solve any MCQ. And I've seen some MCQ, case-based MCQ where entire problem solving is involved. Entire computation of tax, calculation of tax rates, everything is coming there. So that's where you have to be very, very clear. And finally, in this chapter, I also would like to tell you the important focus areas that is about rebate under section 87A. I hope you know that rebate under section 87A is generally allowed for those whose total income does not exceed 5 lakh rupees and the rebate will be tax payable or 12,500, whichever is lower. But that is only in case of optional tax regime. But let me tell you, in case of default tax regime, rebate is allowed if the total income does not exceed 7 lakh rupees. And there the amount of rebate is tax or 25,000, whichever is low. So confused between default and optional. When I talk about salary head of income, in default, you can claim only standard deduction, but you can't claim deduction for professional tax and entertainment allowance. And when it comes to house property, if it is self-occupied property, you cannot claim 24B deduction under default. If it is optional, then you can claim. So students should be very much clear and you should have a gunshot in terms of what are those deductions which I can take in default. there is no room for confusion. We are just a day away for exam. So it's very important that you have to be very clear with that. What will come in default, what will not come in default. And mark my words, question will come in the examination from default tax regime. Very, very important. And sometimes students keep writing the word section 115 BAC bracket subsection 1A, which is nothing but shifting out of default. Sir, whether they say shifting out of default or they say optional tax regime, both the meaning is same. Getting the point, everybody? Shifting out of default or optional tax regime or opting out of 115 BSc, everything is one and the same. Got it? So these are the important focus areas when it comes to the basic concepts. And second interesting chapter, my dear friends, residential status. I don't think I need to specifically tell you what is the important focus areas as such. You need to understand the classification and types of status and ensure that you understand the scope of total income. When I say scope of total income, I'm talking about something called Section 5. That is nothing but Indian income, foreign income, who is taxable. Indian income, if you are ROR, resident and ordinarily resident, Indian income, foreign income, both will taxable. And if you are NR, non-resident, only Indian income is taxable. But if you are RNOR, Indian income will be taxable and also foreign income will be taxable in two cases. Number one, business income, which is controlled wholly or partly from India. Number two, professional income, if there is set up in India. Set up in India means having an office in India. So this clarity of thought is very much required. If that area you do, I think more or less you'll be done with the residential status. Don't be confused. But the only thing required is that you should be very clear in terms of applying that 182 days, 60 days, and the special concept called 120 days also. That areas you have to be very, very clear. Clear? And let me not write anything called separately agriculture income as such, but I'm sure you guys know that agriculture income is straight away exempt under section 10.1, but there is a concept called partial integration which will come into picture in case where a person has got both agriculture income and non-agriculture income. That too when agriculture income is more than 5,000 per annum and non-agriculture income is more than basic exemption limit, where we'll apply stepwise computation of partial integration. Step 1, tax on agriculture income plus non-agriculture income plus base. Step 2, step 4, we'll add surcharge if applicable, and that is definitely applicable. Areas you should definitely move ahead, my dear friends, which is nothing but heads of income. Come from salaries. And here, let me tell you, there's an important amendment in RFA. What is the RFA? RFA is nothing but accommodation. Accommodation is owned. Most of you already know that there's accommodation value of perquisite. Very clear as to what there was a concept called, but now the 10%, 7.5%, and any doubts, you can feel free to ask, my dear friends. Don't hesitate. Yeah. So in NFI accommodation, please keep the important amendment in mind. That is, if population is more than 40 lakh, 10% of salary. Population more than 15 lakh does not exceed 40 lakh, 7.5% of salary. And if population does not exceed 15 lakh, 5% of salary. And there is a story when accommodation is owned. If accommodation is higher, straight away answer is actual rent or 10% of salary, whichever is lower. So please do keep in mind the important amendment related to the concept of rent-free accommodation. Make sense? Good. Done. I'll proceed. So apart from rent-free accommodation, my dear friends, you should also have a clarity on focus areas with related to sweat equity shares, which is important to remember always. And also asset given for use or asset sold. That is important discussion, my dear friends. If asset is given for use for a computer laptop, the value of perquisite is nil. Other asset 10% per annum the cost of the asset. If it is owned, if it is hired, actual hire charges. And when it comes to transfer of asset, what is the story? If it is computers and laptop, we will take actual cost less 50% by WDV for each completed year of usage, less amount recovered, the balance will become taxable. And if it is motor car, we will take actual cost less 20% by WDV for each completed year of usage, less amount recovered, the balance will become taxable. Any other asset, we'll take actual cost and reduce 10% by SLM for each completed year of usage. And we'll also reduce the amount recovered and the balance will become taxable. But keep in mind very clearly the word used is completed year of usage. Don't use anything else. The word used is completed year of usage. So if it is 5 years, 11 months, I will still take 5 years only. But ultimately, we are going to follow usage only. Got it? Are you clear so far, everyone? Please reply once. Yes, thank you very much. Is the voice clear and audible for all of you? Yeah, I'm sure it should be better now. So let's proceed. Come on. So I was telling you a point very clearly that, so in case of asset given for use, asset given for sale, both cases, the value of perquisite is totally different. So that is an important focus area, what you have to keep in mind. Yeah. And one more point is that in case of salaries, you should be clear with the gift given by employer to employee. Don't think about the concept of 50,000. That 50,000 limit is only in case of income from other sources. But for employer to employee, the limit is not 50,000. The limit is only 5,000. So you have to be very clear with that limit with case of employer to employee. Make sense? Good. So these are the important focus areas, what you should be very clear upon when it comes to income from salaries. And of course, your traditional points are there like gratuity, pension, leave encashment and all. Any of the points sometimes keep triggering in the exam. Next. Income from house property, my dear friends, that's a very brilliant topic. And please do keep in mind the interesting competition between self-occupied and let out. And of course, I'm sure you guys have a clarity on difference between the limits that will apply in case of let out and self-occupied. Let out, we don't have any limits, but self-occupied, we have a limit of maximum 30,000. But 2 lakh will come into picture when 3 conditions are satisfied. Number 1, loan is taken on or after 1/4/1999. it is taken for the purpose of acquisition or construction. Third one, it is completed within 5 years from the end of financial year in which loan is taken. So if those conditions are satisfied, then we'll apply the limit of 2 lakh rupees. If not, we'll take the limit of 30,000 only. So please do keep in mind that important focus areas. And of course, I've already told you that if you are paying tax under a default tax regime, then there is no question of taking deduction for self-occupied property. Done. Next point, my dear friends, the most important area, PGBP, which stands for profits and gains from business or profession. There are two possibilities. Number one, a separate question may come from section 35AD or section 35AD, specified business, or a separate question can come from section 40, which talks about disallowances in relation to concept of TDS. That is where when we make payment to non-resident, if TDS is not done or done but not paid before due date of return of income, 100% of expenditure is disallowed. But when we talk about payment to resident, if TDS is not done or done but not paid before due date of return of income, then 30% will be disallowed. This concept they might correlate with TDS provision and ask in the examination. Or of course, your standard methodology of computation of PGBP, where they might give some P&L account, standardized P&L account, and add some points as to what all will add, what all will less. But my suggestion to students is that don't try to mug up what to add, what to less. Have a clear clarity of thought on why we are adding something. If there is some expense which is given in P&L account, but it is not allowed as per income tax, you add it. If there is some expense which is not taken in P&L, but allowed as per income tax, reduce it. If there is some income which is taken in P&L but not taxable as per income tax, reduce it. If there is some income which is taxable but not taken in P&L, you add it. Simple. Just go by logic and the concept. Don't try to muck up what to add, what to less. If you do that, you will never get the perfection data. And since you have some time now, I suggest that you please solve the problems on PGBP. Don't try to just go through. Because some students, I know that what they do is they don't try to solve any question. They just read the question. If you read the question, what will come? Everything looks as if you know. See, we're at that stage where we are just very close to exam. Now it's not something that we don't know. It's that we know everything. But that connecting the dots is very important. That is most important, crucial point. Yeah. Next, my dear friends, when I talk about capital gains, the most important area, section 50, capital gain on depreciable asset, and 50AA, the latest amendment which talks about capital gain in case of units of specified fund, which are issued on or after 1/4/2023, where they are deemed to be short term. And of course, section 50B, slump sale. And you have to keep in mind the exemptions provision, my dear friends. And of course, the most important exemptions are 54, 54F, and 54EC. These three are most important provision. And sometimes 54B come in exam, but generally what are the focus areas is 54, 54F, and 54EC. 54 is residential property, 54F, sold any property other than residential, investment is main residential property. And 54EC is a case where you are purchasing bonds. Bonds of what? Bonds of NHAI, RECL, PFCL, IRFCL. And the time limit for purchase of that bonds is 6 months, my dear friends. That is important. Good. Student asking my question, sir, presumptive income. Yes, presumptive income, that 44AD, ADA, and AE. Generally, the point is that amendment point is most important. In amendments video, if you see that 2 crore limit of 44AD, it is 3 crore in case where your cash receipt does not exceed 5% of total receipt. And for profession, the limit is 50 lakh. But if your cash receipt does not exceed 5% of total receipt, then the limit is not 50 lakh, limit becomes 75 lakhs. So that is one area where you have to focus upon. Amendment area I'm talking about. But that 8%, 6% is something what you all know. I need not specifically tell you have to focus. Yeah, next coming there. Income from other sources, my dear friend. And of course, something crazy concept, which is nothing but the concept of gifts, which you all know. But don't miss out on any point. Gift, have a clarity that 50,000 limit will apply for each category separately. And in movable property, we know that it covers only shares and securities, jewelry, drawings, painting, sculpture, archaeological collection, work of art, and bullion. In exam, the question they give motor car, bike, and all, don't tax it because they are not covered in definition of movable property. Have that clarity very clearly. And one more point in other sources is issue of shares at a price more than fair market value. Wherein 5627B I'm talking about. Section applies when issue price is more than face value, and taxability is on difference between issue price and fair market value, provided issue price is more than fair market value. And here, other sources also keep in mind about the concept of family pension, my dear friends. That family pension received by the family members, that there is a deduction what we get, 1/3, 33.33%, that is nothing but 1/3, or 15,000, whichever is lower, that can be taken as deduction. So these areas are very, very important areas, what you should definitely focus upon when it comes to income tax, heads of income, my dear friends. Clear? Now moving ahead, we have got one small topic called clubbing of income. And let me tell you, generally, clubbing of income or set off and carry forward of losses, these two topics together, generally they come in the exam for 4 to 6 marks. And it is a very, very, very scoring area. Especially set off and carry forward is such a scoring area where exam question comes almost every time, my dear friends. Almost every time the question keeps coming in the exam from set off and carry forward. Getting my point? And you should be very clear on set off and carry forward that speculation loss set off only with speculation profit. Non-speculation loss will set off with both speculation and non-speculation. Long-term capital loss only with long-term capital gain. Short-term capital loss with short-term and long-term. And business loss can be set off with any head of income except salary income. Loss from specified business set off only with income from specified business. And of course, I'm sure you know this point that we cannot carry forward any losses unless return of income is filed within the due date, except house property loss and unabsorbed depreciation. That means house property loss and unabsorbed depreciation can be carried forward even though return of income is filed after the due date. But other than those two, we cannot carry forward any loss unless return of income is filed within the due date. And always keep in mind the priority for set off, my dear friends. First one, current year intra, then current year inter, then only give treatment for brought forward losses. Without adjusting current year losses, don't adjust brought forward losses. Clear? Good. And clubbing of income, you know about the most important point in clubbing of income, that is about remuneration of spouse from a concern in which other spouse has substantial interest. Will club in the hands of that spouse has substantial interest. One more thing is most important about clubbing of minor income. And if minor is earning income by his own skill, talent, manual work, there is no question of clubbing. In other case, there is clubbing. And will club in the hands of that parent whose income is higher. And that parent will get exemption of amount clubbed or 1,500, whichever is lower. That can be claimed as exempt. Clear? And that 1,500 limit is per child. It is not per income per child, it is per child. And there is no limit of number of children. And that too, when a person is paying tax under a default tax regime, he can't even take that exemption. So these areas you focus, I'm sure your clubbing set of chapter will be done. Clear? Good. And deductions, separate question for 4 marks is highly possible. Especially they'll combine small sections like 80C, 80D, 80E, interest on loan taken for higher education, then 80G, donations. Donation, I hope you know that now there is amendment in 50% with qualifying limit. 50% without qualifying limit. Earlier there was Prime Minister's Drought Relief Fund, Jawaharlal Nehru Fund, Indira Gandhi Fund, Rajiv Gandhi Fund. They have removed all the Gandhi funds now. There is only one fund there. Prime Minister Drought Relief Fund. That possibility, that point may be covered in the exam. And 80 GGB, GGC, political party. I'm sure you know that political party, every rupee has to be contributed rather than cash. If it is cash, there is no question of deduction at all. And 80 QQB, RRB. QQB is royalty on books. RRB is royalty on patents. In QQB, RRB, the limit is royalty income or 3 lakh, whichever is lower. And in case of QQB, especially keep in mind about that point called if it is lump sum royalty, we'll consider the entire figure. And if it is percentage, we'll consider only maximum 15%. So like this small areas, you should definitely focus upon, my dear friends. That is where you'll be able to score some better marks. If you want better marks, then that is the only option. Clear? And moving ahead, advanced tax, TDS and TCS. Advanced tax, I'm sure you know that we have to pay tax in four installments, 15 June, September, December, and March, and percentage is 15, 45, 75, and 100. And 234B, 234C, we have got two interest section. 234B will come into picture in case where total advance tax paid is less than 90% of tax payable. And 234C will come when installment, it is deferment. Instead of 15, if you pay at least 12, that is okay. If you pay less than 12, interest will come. Second, instead of 45, you pay at least 36, it is okay. If you pay less than 36, interest will come. Third, you have to pay 75. Fourth, you have to pay 100%. That is in case of advance tax. TDS, almost every section is important. I really don't want to tell the focus area as such in TDS and TCS because almost every time it is coming in exam for 6 marks. But undoubtedly, I'll tell something called 194Q and 206C 1H. That is about TCS and TDS. More than 50 lakh, 10 crore turnover. That point is very important. And if both are applicable, TDS will override the TCS provision. That is very important provision as such. But other section, if you ask, 194H is important, I is important, or J is important, I would definitely tell that everything is important there. Because in TDS, you can't be choosing. This topic, you really cannot be choosing. Every section is important in TDS and TCS. And I keep seeing students, a lot of them, they tend to ignore TDS and TCS, which is not acceptable at all. And especially that TCS on alcohol, liquor, scrap, mineral, coal, lignite, iron ore, parking lot, they are all important sections. And you cannot afford to leave them. Please ensure that you focus on TDS and TCS. Don't leave it. Luckily, you got some time. You got some more time for the exam. So please do it. Very, very important. 6 marks will come in the exam generally from TDS and TCS. Not a joke. It's as good as your 10% of the syllabus. 50 marks paper, 5-6 marks is coming. Then what is it? Got it? Then, one small topic called return of income. In this, the important focus area is the concept of your updated return and the concept of linking of Aadhaar with PAN. These are the two important focus areas. Other things are standard points as where PAN is applicable, what are the cases where quoting of PAN is mandatory. They're all general points. Clear? And students think that there's one more topic in institute material, that's something called income tax liability, computation, optimization, and all. That is nothing but your computation of total income. That is not something which is totally different as such, which is a part of computation of total income. Got it? Fair enough. Sounds good till now. Till now, whatever I discussed, are we clear for everyone in terms of the focus areas for income tax as such, my dear friends? Yes, thank you so very much. Now let me proceed to discuss with you about the key focus areas in terms of GST. The moment I say GST, some of them will get scared just like that, but it's not like that. How much ever interesting is income tax, that much ever interesting is GST also. How much ever interesting is GST, that much interesting is income tax also. So there's nothing to worry about it. Both are very important. And ultimately, both are a part of a syllabus. And when you enter CA final, automatically both of them, each topic, income tax has weightage of 100 marks, GST has got weightage of 100 marks. So there is no question of compromise as such there. Come on. So GST, the important focus area is, my dear friend, first one is supply. Especially in supply, you have to focus upon section 7(1)(c) and also section 7(2)(a) and also section 8. Very, very important areas. That is, section 7(1)(c) basically talks about transactions which are regarded as supply, even though there is no consideration. There are some 4 points given that 7.1c transaction which are regarded as supply, even though there is no consideration. Consideration is not there, but still it is regarded as supply. In that, the first and foremost interesting point is permanent transfer or disposal of business asset on which ITC is claimed. Number 2, supply between distinct or related person in the course or furtherance of business. Number 3, transfer of goods from principal to agent. Number 4, import of services by a person from a related person or from any of his establishment outside India in the course or furtherance of business. So those are all the interesting important points what we have got in section 7.1c. And 7.2.8 talks about transactions which are neither regarded as supply of goods nor regarded as supply of service. And there you know the point about court or tribunal, employee to employer. But there you have to keep in mind one important point, that is sale of land and building, except construction service. There law told in case of construction service, GST will apply if the entire consideration is received after issuance of completion certificate by competent authority. Even if 1 rupee, I repeat again, even if 1 rupee also is received prior to issuance of completion certificate or occupancy certificate, then GST will apply on the entire value. For example, if the flat value is 1 crore, 30 lakh is received prior to OC, 70 lakh is received after OC. That is occupancy certificate. GST will apply on entire 1 crore. Those points have to be very clear for you. And section 8, of course, the taxability of component supply and mixed supply. Component supply is that supply which are naturally bundled and one of which is a principal supply. And component supply is taxable at the rate of principal supply, but mixed supply is taxable at highest rate. But the important condition is mixed supply is that the mixed supply is where 2 or more supplies are not naturally bundled and they are given for a single price. So if it is not a single price and it is not a composite supply, your answer should be it is neither a composite supply nor a mixed supply. Like that, you have to be very careful in answering question related to composite supply and mixed supply. And charge of GST, important element is RCM. And of course, one more most important element is section 9.5. Section 9.5 is, my dear friends, your story of section 9.5 is what? Certain services, if they are supplied through e-commerce operator, then e-commerce operator is liable to pay GST. And if e-commerce operator does not have physical presence in India, the representative in India is liable to pay GST. And if there is no representative, they must appoint a representative and make him liable. And I'm sure you know what are the points there. That is service of transportation of passenger by way of radio taxi, motor housekeeping. Except when person supply service is liable to be registered. Clear? Amendments you definitely have to do. Next, composition scheme. One question is highly possible, my dear friends. They might ask the rate of tax, or they might ask about composition scheme for services that 50 lakh story, where there is 3% tax rate as such. And I'm sure you know that in composition, there is no question of claiming input tax credit as that, and there's no question of collecting tax from customer. Very clearly, we issue a document called bill of supply. We do not take any input tax credit. Directly, we pay tax to the government. Clear? Done. And one latest introduction to syllabus, that is about the concept of place of supply. And in your syllabus, you have got section 10 and section 12. And I will write one line. Thing is important. I'll tell you why. This was not there up to November exam, but from May exam onwards, this topic of place of supply and second topic called TDS and TCS, both have been brought into syllabus. And place of supply, we have got interesting points like where there is movement of goods, no movement of goods, place of supply is the place where movement of goods terminates for delivery to recipient, bill to ship to model, principal place of business of such third person, goods are assembled or installed, then the place where goods are assembled or installed, goods are supplied on board a conveyance. What is the answer there? the place where goods are taken on board. And section 12.3 is very important. Immovable property, the place where property is located or intended to be located. And of course, 12.5, training and performance appraisal services. And 12.7, organizing an event. And transportation of goods, transport of passengers, that is also important. Transportation of passenger, if recipient is registered person, location of such person. And if recipient is unregistered person, the place where passenger embarks on the conveyance for continuous journey. So like this, small points are very important. And TDS, TCS, you know that TDS will come into picture when we make a supply to any department of government, public sector undertaking, society established by the government, and that too when contract value is more than 2.5 lakhs. And please do keep in mind that contract invoice by 2 lakhs directly don't tell yes. Less than 2.5 only and only value. The concept of I hope it's visible now. There was some technical issue, it just got closed. Yes, let me proceed. Thank you so much. Yeah, what I was telling is that when it comes to TDS and TCS, TDS in the question, if they give the figure as 2,60,000, don't get yourself confused, my dear friend, because sometimes they try to give 2,60,000 including GST. You should be very clear that TDS story will apply only when the contract value exceeds 2,50,000. And contract value always means invoice value excluding GST. So you should see the figure before GST. If that figure is more than 2,50,000, then only the concept of TDS will apply. Clear with that point, everybody? And moreover, my dear friends, what is the rate of TDS? 1% plus 1%. And one special point in TDS is that the provisions of TDS will not apply if the location of supplier and the place of supply. I repeat again, location of supplier and the place of supply both are in one state and the location of recipient is in different state. I repeat again, if the location of supplier and the place of supply both are in one state and the location of recipient is in another state, in that case, the provisions of TDS will not apply. And TCS, I'm sure you know that it will apply only when supply is made through e-commerce operator. When e-commerce operator is making the payment, for example, let us say Shiva Teja is buying one product on Amazon. The actual supplier is some ABC person. That ABC person is supplying to Shiva Teja through Amazon. When I buy from Amazon, I'll make payment to Amazon. Now Amazon will in turn pay to ABC. Now when Amazon is paying to ABC, Amazon will do something called TCS, which stands for tax collected at source. Getting the point, everybody? Next. Exemptions from GST, my dear friends. Just revise, my dear friends. Don't just revise them. Don't try to mug up or don't try to just like that keep all the points in mind. Just revise, just go through all the points. Just revise and have an idea. You should be able to identify whether a particular service is exempt or taxable. That idea is required in terms of exemptions. And of course, the important point called time of supply and value of supply. Almost every time question is coming in exam. Almost every time, including that something called net GST liability computation. Wherein you calculate input tax credit, you will calculate what is output tax and set off. And I'm sure you know how to set off. IGST credit, first you have to set off. Before setting CGST, SGST credit, first you have to completely utilize IGST credit. IGST credit, first use it for IGST, then for CGST or SGST in any order or any manner. That point you have to keep in mind. And one more important element there, that is CGST credit, you can't use it for SGST. SGST credit, you can't use it for CGST. Clear? And value of supply, please do keep in mind about inclusions in value of supply. We have got 5 points there. That is any tax, duty, cess fee except GST. And TCS and income tax is also not included. 15.2b, supplier's obligation in relation to supply met by recipient. 15.2c, all incidental expenses or anything charged by supplier from recipient, that is also included in value of supply. And 15.2d, any interest, late fee, penalty, that is included in the value of supply. And last point, 15.2e, any subsidy linked to the price except subsidy from central government or state government, that is also included. And exclusion, only 2 points are there. Number 1, discount recorded in the invoice. Number 2, discount given after supply is made based on agreement existing at the time of supply, and it is linked to the invoice and proportionate credit is reversed by the recipient. Those points you have to keep in mind. Clear? Good. And now that I wrote about net GST liability computation, I'll also write here some focus area, which is nothing but block credits. Whether I tell or not, I'm sure you guys know that block credit is definitely a focus area. 100% question will come in the exam from block credits. And from registration topic, my dear friends, focus on the concept of cancellation and also focus on the area of procedure for registration and CTP and NRTP. And you should definitely remember about the concept of credit note and debit note. That is important. There's no room and escape for that. And records to be maintained and e-way bill. Please remember about time limits and cancellation. That is 1 day story and over-dimensional cargo, 20 kilometers, if not 200 kilometers. That point you should definitely remember. And then returns topic. I suggest that you have to remember GSTR 4 and of course your GSTR 9, which is very important because 1 and 3B questions keep coming almost every time in the examination. So some different concept everyone. And electronic credit ledger, cash ledger. I hope you know that electronic credit ledger is only for payment of tax. If you have to pay any interest, late fee, penalty and all, we have to pay only using electronic cash ledger. And moreover, if you're required to pay any tax under reverse charge mechanism, that also has to be paid using electronic cash ledger only. So these are the very, very, very important focus areas, my dear friends. One point is very clear before I conclude the session and tell you all the best. That is, see, it is not that only these will come in the examination, but these areas are to be focused more, because generally, if you look at the past trend analysis, these are the areas from where majority of the questions generally keep coming in the examination. That is the reason why we tell it as a focus area. As a professional student, as a chartered accountancy student, it is important that every area is important, but given the time, and the time is hard pressing and we are very close to the examination, it is important that as a mentor for you, as person who trained you, it is very important that I should tell you what are the areas to be focused more. That is the reason why this particular session has been taken. And a student is asking QRMP. QRMP has come in the exam many times before. So again, probability is slightly less, but nevertheless, you have to look at it. So these areas, whatever I mentioned now, are the major focus areas what you have to look at. And I try my best to tell you that whichever focus areas have to be done. And I also put my effort in terms of revising some important parts, which I'm sure will act as an instrument for your preparation and revision, my dear friends. So last but not the least, I wish you all the very, very best, my dear friends, and I wish you all success. Do perform really, really, really well. And any doubts, anytime, feel free to get back and ask. All the very best, my dear friends. Take care. Wish you all success. Do write really well. Thank you so much, and come out with flying colors. Thank you. Shiva Teja signing off. Take care. Bye-bye. Thank you.